The week ahead. Friday was a market holiday. However, it was not a federal holiday, which resulted in the monthly jobs report being released while the markets were closed. The electronic reaction to the release was not really very descriptive. Bonds had a slightly higher yield. The ES was slightly higher. We must wait for Monday to assess the market's real response. The unemployment rate remained quite low and provided no safe haven for the FOMC. Wednesday will provide more inflation news as we receive CPI. CPI is secondary to PCE. However, it still will give us some look at inflation. There's other numbers this week, but I think the real meaningful information is likely to start on Friday, which most people refer to as the start of earnings season. This is simply an assumption, as there is no official earnings season start. But we consider when the banks start to announce that kicks off the season. On Friday, we have JP Morgan, Citigroup, and Wells Fargo. Part of the reasons that earnings are important is they're more current than many of the economic releases. So many of the economic releases have a meaningful lag in them. The earnings reports are more current, but additionally, the spokesman is oftentimes the chairman of these big banks or these companies, gives you a more up-to-date insight as what do they really see going on in the economy. And I think that could be what really will drive the market. Prior to the start, the ES has found support at the 4,100 level. It found it there on Thursday and Friday. So that's the level that is being mechanically supported by the market. I've often talked about the semi-permeable membrane. Every time a reference is hit, it gets weaker. So we hit that reference on Thursday, we hit it again on Friday. So the reference is likely to have been weakened. Currently, the market appears to be overly long. However, it often takes a catalyst to trigger a meaningful counter auction, or in this case, break. I don't know if the CPI or the earnings are going to serve as that catalyst, but it certainly is a possibility. But from a very practical standpoint, our focus as the week opens is, will the market hold the 4,100 level? If the market holds the 4,100 level, there's no real change to the downside and the market stays supporting. If the market is showing us any real weakness, we will find acceptance back down below the 4,100 level. Good trading, and I hope you have a great week.